John Lothian News wants you to be safe and for us to be able to return to being with one another again. To get there, we need to do the following to beat this pandemic. Wear a mask, stay 6 feet apart, wash your hands for 20 seconds at a time, and self-monitor your temperature. Stay safe, stay smart.
You have a great position, having been in leading positions with MSCI and now FTSE Russell, and there's a global multi-player battle going on between exchanges over these two index families. What are the issues and factors that are driving the competition?
The ultimate factor that drives use and adoption of the indexes is the need for risk management in the derivatives markets with regards to listed futures and options, which is the area that I focus on. And that's largely tied to the asset base of the index families. If you think about indexes, effectively what they do is they provide investors globally with the lens through which to view the market. And that lens becomes the basis of the way they think about the markets, the way they conduct their research, what they're measured against, what kind of passive investment products they create. In our case, we've got, I think, about roughly 16 trillion in assets globally that are linked or that are benchmarked against FTSE Russell indexes across fixed income and equities. So obviously that's a huge asset base, and every single manager that's running money against the FTSE Russell indexes, whether it's active or passive, needs a way to risk manage that asset base, and therefore that drives demand for risk management products. In some cases, OTC products. In many cases, listed futures and options.
In particular, what are some of the issues that caused the change from SGX to Hong Kong with some of these products?
Obviously, I can't speak for Hong Kong Exchange and for MSCI. I think we all saw the news in May. MSCI made an announcement regarding their decision to sort of make a strategic move from Singapore to Hong Kong. That created a need for SGX to find another partner to help it maintain and continue to build out its equity derivatives risk management platform. We have a long history of working with Singapore Exchange, primarily on the FTSE China A50 index futures, which is the main offshore risk management product and market for global investors that are looking to access and manage China A equity risk. That product itself, I think, trades, about 100 million in volume every year. Pretty sure it's top 10, if not top 15, global equity derivative product. For us and for them, it was a logical step to expand our relationship, given that we have such a long track record of working closely together. So we started doing that in July with the launch of the FTSE Taiwan index futures. That led to a number of other launches throughout the rest of the year. I think in total, we launched 23 new FTSE Russell index-based futures on Singapore Exchange, and that allowed them to really maintain the offering and the suite for investors globally. I think we did a pretty good job, and I think it was pretty well received by investors globally. Last I checked in November, we captured about 90% of the typical volume flows that were originally in that MSCI product offering. It really resulted in a pretty significant growth of our business in Asia and on Singapore Exchange.
Where in the global marketplace are the ESG indices being received most warmly, and why there?
ESG has been and continues to be a immensely growing topic for investors and market participants. A lot of this originated through large global investors, public pensions, that over time started to adapt more of a sustainable investment perspective with regards to their mandates. Probably fair to say that really, to some degree, originated in Europe and has increasingly become more of a global phenomenon. And what we see on our side in the derivative space, especially, is an interest in global investors to kind of maintain their exposure to the headline equity indexes, but through more of a sustainable investment type of lens or type of tilt. And that's not very different from where other index providers and other exchanges have seen opportunities and launched new products. We, in our case, were the first to launch an ESG index future in Asia. We worked with the TIFEX back in, I think it was June or July, if I'm not mistaken. And we launched the first Asia listed equity index ESG future. That was the FTSE for Good TIP Taiwan ESG index, which is a local Taiwan equity ESG index. We do expect to launch a number of other additional ESG indexes in the near future. Again, it's kind of, if you think about the way that demand for risk management originates, it comes from the need of asset managers and investors to manage that risk. And as you see more allocations to sustainable investment types of strategies, indexes, and mandates, ultimately that's going to drive demand for risk management for those types of products.
What has happened in trading patterns since the Brexit deadline passed relative to FTSE Russell indices?
FTSE 100 index futures were up pretty well last year, low double digits, if I'm not mistaken. I think somewhere between maybe 12 and 15% year on year in terms of futures and options volumes. There was certainly demand for risk management as there was uncertainty and volatility in the market. So that's one outcome of that we've seen. I'd say the second outcome that we've seen, which was interesting also, was the way that investors looked at and managed their views based on either taking positions in the FTSE 100 or the FTSE 250. The FTSE 100 being more of a international equity play based on where the revenue from those companies comes from, relative to the FTSE 250, which is more of a domestic play. So depending on where the sentiment and view was on Brexit, you saw flows and performance in FTSE 250 or FTSE 100 sort of moving in those directions.
What are your plans to tap into the individual investor day trader growth in the U.S. that we have seen with the rise of Robinhood and similar platforms?
The Robinhood effect. Certainly, we've all seen and heard and read a lot about the quote unquote Robinhood effect. In the derivatives market, there is equally, I think, a rise in retail participation and interest. I'm sure you've seen that, and the people that you speak with have mentioned that. In our case, I think one clear indication of that is the immense growth that CME has had on their micro futures. In our case, particularly the growth of trading volumes in the micro Russell 2000 index futures. I mean, the numbers are, outstanding, amazing. I think we're looking at 2020 year-on-year growth of probably about 500% in the micro Russell 2000 index futures. And my understanding and sort of anecdotally what I hear is that there's a significant percentage of that that's distributed and traded and transacted through the retail sector. So for me, that's been a very strong indication of increased participation of retail in the derivative space.
How has the trade war between the U.S. and China influenced your global plans for FTSE Russell?
The trade war doesn't necessarily impact our plans. I mean, obviously and everyone's seen in the news, it does impact our index products and the way we think about the markets, and again, kind of create that investment lens for investors. We ourselves, as FTSE Russell, as an index provider, we aren't in the business of defining what markets investors should invest in. We effectively take our cues from the investment community itself. So in the case of China, obviously there's been a lot of talk and activity around the executive order and the downstream impact of that with regards to sanctions. And we've made a number of announcements of adjustments to our indexes, as have numerous other index providers. That is really just a reflection of the ability of investors to access markets, transact in markets. Has a lot of it has to do with the plumbing in the markets. So if investors aren't able to get custody of securities or access securities or transact in FX or whatever the case may be, then they need an investment opportunity set that really reflects what they can transact in. So we follow what the market does and what investors, the advice and the feedback that they give us.
What is the greatest current threat to the index business, and how are you mitigating that risk?
The thing that pops into my mind is the competitive nature of the business. So there are a number of index providers in the market. There are a number of key players. The interesting thing is, though, that all the different players have sort of different strengths and footprints in certain categories. I think what differentiates FTSE Russell, I think there's two things that differentiate us a little bit. One is kind of going back to one of my earlier comments. I think it's fair to say that we are the broadest index provider in terms of the markets that we cover, the asset classes that we cover, the footprints that we have in US equities, global equities, fixed income, listed real estate, et cetera, et cetera. We have a number of key domestic partnerships that we work with in certain markets, like our partnership with the Joburg Exchange in South Africa, Bursa Malaysia in Malaysia, et cetera, et cetera. The depth and the breadth of our businesses, I think it's fair to say that it's broader than other index providers in the market. So that's, I think, one key differentiator. And I'd say the second really key differentiator is our position as part of a broader market infrastructure company within LSE Group. We're the information services provider, but other key parts of the group are the trading, capital markets, capital formation part of that, and then the post-trade part of that. And I'll just mention, obviously, that's going to change significantly once the Refinitiv transaction closes. So that's going to be a relatively transformational event for both firms, and really broaden and deepen our footprint as a provider of market infrastructure, a provider of data analytics, investment solutions.
Last question. Anything else we should talk about?
I'd say one of the key things for me, and one of the things that we always talk about on our side, is the continued growth of the global derivatives and risk management markets. The full year numbers, I haven't seen them yet, but I would expect them to look pretty good in terms of growth for 2020. And ultimately, the pool of investable assets globally is just continuing to grow. That creates more demand for risk management, and the derivatives markets in which we operate will continue to grow. In our case, we had a very significant year in terms of growth. We launched in total 27 new equity index futures. Our volume globally for the year, I'd expect to probably be about 260, 270 million. In total volume of FTSE Russell equity index futures and options globally. I think that growth and that need for risk management and the need for derivatives markets is just going to continue to expand going forward.